Markets were down today, down a lot. It can be a little unnerving to see massive amounts of wealth erased so quickly. We all would really like to know the same thing. Is this the end of the selling or just the beginning? We're going to take a close look at where we are now and a possible source of relief from a very unexpected direction. Today, the Dow Jones Industrial Average was down over 1,600 points. That represents almost a 4% decline. That's number 4 on the list as far as point drops are concerned. Today was a tough day. Taking into consideration the VIX, this is a volatility index. We spoke about this the other day, also known as the fear index. It hit levels of just above 30. That's very significant. That's the first time the VIX has seen 30 since August of last year. Now, the different lines represent the different major markets that we follow. In blue, that's the Nasdaq. In green, S&P 500. In yellow, Dow Jones Industrial Average. This goes back to January, by the way. In red, the Russell 2000, the small cap index. Bear markets, not to say that we are in one, but bear markets are usually represented by very weak small cap stocks that lead us lower. In the Russell 2000, percentage wise, it actually could be in a bear market right now. Now, the futures market says a Fed cut's coming soon. In yellow, S&P 500. In blue, that's the probability the Fed will not cut rates in June. I don't think anybody thinks we're not cutting rates in June. There's a very strong correlation over the past couple of months, and we've seen today a very big decline in the futures market. It's important to note the futures market's moving lockstep with stocks. Now, in red, that is the daily change in the same contract, in the June futures contract. So when these red bars go down, it means the probability of no Fed cut declines, meaning a Fed cut's coming sooner. And today's drop in the June contract is the biggest drop we've seen. This chart only goes back a couple months. It's actually about a year or so. This is a very significant drop in the futures market, to say the least. Now, here we see the roadmap as far as the Fed decisions moving forward. In red, that's the probability of a quarter point cut. Only 24% chance in May, but in June, we have a 64% chance the Fed's going to cut by a quarter. In blue, that's a half a point cut probability. And we see 52% chance that will be down half a point from current levels by July. And in yellow, that's a 3/4 point cut probability as well. And in September, there's a 45% chance we'll be down 3/4 of a percentage point from now. So the Fed funds futures is certainly listening to the stock market, and it's predicting Fed cuts are coming a lot more aggressively than we once thought. Is there a case for recovery or stability? Well, the answer may lie in Friday's economic calendar. Friday is a big day. We have the U.S. unemployment reports. We also have the Federal Reserve Chairman Jerome Powell will be speaking. Now, Doge and the jobs reports. We see a massive amount of layoffs soar in March based on the federal workforce cuts. This has been in the news. Doge actions attributed to 280,000 layoffs over 2 months. Now, the forecasters are projecting that U.S. employers have added 140,000 new jobs in March. We're talking about the non-farm payroll Friday, tomorrow. Now, last month's non-farm payroll number did not take into consideration the Doge federal layoffs. So the real concern is that when those layoffs do hit the tape in this month's non-farm payroll, is 140,000? Is that a realistic estimate? Let us know, by the way, what you think. Should it be lower than that? This is non-farm payroll, obviously, before tomorrow's report. Last month, we had 151,000 jobs. Before that, 125. Is 140 realistic? Do you think it'll be lower? Maybe higher. Now, in yellow, this is the JOLTS report from the other day. And this is a different employment report. It always, is discussed hand in hand with a non-farm payroll. And it reported 1.79 million layoffs and discharges that occurred last month. That is the highest high we've seen since October, and really the second highest high we've seen for years now. So taking into consideration the layoffs, and by the way, I don't believe that this JOLTS report also takes into consideration the Doge, federal layoffs either. So this number could be pretty significant. Not what we really need in light of today's sell-off in the stock market, but the Fed can make a difference. Recession fears roiled U.S. markets after Trump tariffs. What investors need to hear from the Fed's Powell on Friday. See, Jerome Powell speaking on Friday. And investors also want to know how Trump's tariff policy could affect the Federal Reserve's plan to continue cutting interest rates this year. The Fed funds futures traders on Thursday were pricing in about 4 rate cut reductions by the end of the year. So the Fed funds futures are telling us one story. But the question is, does the Federal Reserve believe the same thing? Do they feel the same urgency, we should say, to cut rates? Now, here's a worst case scenario. We have a bad jobs report tomorrow, which indicates growth is slowing, but there's no firm message from the Fed. If, on the other hand, the Federal Reserve, meaning Jerome Powell, now it's not a regularly scheduled Federal Reserve meeting, it's a different event, but he is expected to make comments. And if his comments allude to the fact that the Fed is going to be more reactive to, in light of stock market weakness and especially a bad jobs report. Now, to be clear, we don't know the jobs report's going to be bad. But if it is, we'd like the Fed to be firm in their message. And unfortunately, they're not always so firm. This is a transcript from the last press conference. They said, "My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people." Well, they have to say that. But they further on say, "We do not need to be in a hurry to adjust our policy stance, and we are well positioned to wait for greater clarity." That, I believe, is a worst case scenario. If the Fed, or Jerome Powell, I should say, basically says, we're looking for more data. We're not sure yet. Of course, we're concerned about the stock market, but leaving us, the investor, in a falling stock environment, left to wonder, is the Fed going to cut rates? When are they going to get around to it? So the takeaways from all this are as follows. The markets are in a very weak state. That's to be sure. The VIX is above 30. But then again, the VIX did not go up. If you watch the intraday action, it did not go up in a panic. It did not go up very quickly. And it didn't go to 35, and it certainly didn't go to 40. So a lot of investors are saying that because the VIX did not show panic, the selling is not over. Also, the futures market, well, they're looking at lower rates soon, but we're bracing for a potentially weak jobs reports. And we're also bracing for the Fed's reaction, or maybe a lack of a reaction. So there's a lot to take into consideration here. Obviously, in a very weak stock market environment, it's susceptible to black swan events or even a minor, infraction on the economic calendar. So we're going to keep a close eye on this, and we'll be sure to update you along the way with, any new breaking news. We hope this has been helpful. We look forward to seeing you back soon.